Hello guys, and welcome back to another video of the intuition phase. So in this video we are going to talk about the trades that we take on the lower time frames. Now the reason why I'm doing a video of this is just to give you some clarity as to why these trades are taken at certain times and how best to bring out the probabilities. Now in terms of probabilities, if you haven't watched the Improve Your Odds video, then part of what I'm saying in this video won't make sense. And I'm not going to repeat what I've said in another video. So please go back and watch that video before watching this one. Okay, so let's start off talking about sessions. Now, this is going to be a very basic way to explain it. I'm not going to explain it in too much detail because, to be honest, there's no need. But let's think about the main sessions that we have. We have not the Asina, Asia, London and New York. Okay, and for me, hold on a sec. That's a bit big enough, right? There we go. So we have Asia, London, and New York. Okay, for me, Asia's the write-off purely because I'm sleeping. So you know what? I'll do Z, Z, Z. You know what? I'll probably draw me. I don't know what position. Actually, to be fair, I sleep in a weird position like that. Right there. There we go. So that's me sleeping. So I don't trade that session. So we got London and New York. So why is the session so important? Now, what we need to know and understand is that the first 2 hours of each session is high liquidity. Okay, and what I mean by that, there's a massive volume of traders trading the open. Okay, so that is when that's when the session is most volatile. And why this is important is purely because the moves that we catch that have that impulsive move only happens pretty much during the high liquidity point, and then it dies down for a little bit, and then New York comes and then it impulses again, and then it dies down again. For me, the Asia range is purely what I've noticed anyway. It depends on pairs, to be fair, but on the pairs that I focus on, which are these three, what Asia range does is generally just a consolidation. So, but I haven't backtested this enough during Asia. Well, I haven't backtested it at all even to see if this works, purely because I don't need to. I don't trade Asia, but if you do trade Asia, then I suggest obviously you test it out to see if it does work. But generally what happens, you have this consolidation phase during Asia, then London will come and take out some sort of liquidity, and you have some sort of impulsive move, and then New York will come. Why did I draw it like that? Then New York will come, right? And you'll either have a continuation, okay, so, or you'll have a full-on reversal, okay. So let me try and separate this. Okay, so that's just a rough idea. Okay, so the whole idea comes from the fact the first 2 hours have high liquidity. Okay, Asia ranges generate like a consolidation phase, and then during London we have a grab of liquidity of the Asian high or low. That doesn't matter too much at this point for the way that I'm gonna show you how to trade this. But in London we have some sort of direction which somewhat creates the high or the low of the day. And then in New York, what we generally have is either continuation or reversal. Okay, so how this works is that we are going to trade purely for the first couple of hours of London and the first couple of hours of New York. Obviously, you need to find out because I know we have people from all over the world. So I'm not going to give specific timings. Please find out when London session starts for you and when New York starts for you. But just before London, we do have Frankfurt session, but you can trade that if you want to. But for me, that's more when I'm waking up, and it's about 7 o'clock. So what I would say is, if you are going to trade it, it's fine. Like you can pretty much trade any form of structure, right? The rules are rules. But in terms of catching high liquidity, you're better off waiting for London. But I know Frankfurt does sometimes have some impulsive moves, which leads to the impulsive move, which grabs liquidity. So sometimes you can catch that move that is grabbing that liquidity. But But in terms of when to start following your structure, you can start following your structure from any point. Okay, it doesn't really matter. But the whole idea comes from you want to start trading the first few hours of each session. Okay, and what this will do, it will allow you to trade for less, allow you to have less chart time for a better reward. So in terms of trading for your time, this is probably the best way for you. And for me personally, I mean, because we've only started doing this purely because the higher time frame plays just since summer have been pretty dry, so we had to try and adapt, and this is a form of adaptation. And to be honest, I absolutely love it. Like, I don't think I don't think I can explain how much time it gives you, because as soon as I catch a trade in London, I don't generally trade in New York, and the rest of the day for me is free. I don't need to trade. And the thing is, you don't need to trade every single day. Sometimes you can catch a really big trade and you can be done for the week. It's the matter of how you take it. For me, if I catch a good trade, I'm not too fussed for the rest of the week. I will just look and see what is there. If anything is there, I will take it. But it all depends on your risk appetite and how aggressive you wish to be for this. Anyway, so let's talk about entries. Okay. So I don't need to explain our entry criteria because you guys should know that by now. But let's talk about probabilities a little bit. So what we have is for this to work, we need to understand what order flow is. Now we should know that order flow is what? It is mitigation. Okay, simple as that. But just one thing to bear in mind is, and something that I will keep on repeating, is if you have too much mitigation, it's a no-go. Because what that means is that this is just grabbing it's building liquidity, and then you should probably have an impulsive move that goes to the opposite direction. That's generally what happens, right? What we need to look for is generally mitigation plays that happens like 1, 2, 3, and then probably on the second or third one we have the full release. And that release is essentially what we're trying to catch. If you obviously catch the trade here, it's fine. You just have to wait a little bit before the release even happens. Okay, it's fine. But you need to understand that order flow, you generally have a couple of mitigations, and then you have that impulsive move. So we are looking to catch that impulsive move. Now, this is when we tie in the fact that during the liquidity hours, we're trying to play along that liquidity, right? So we're trying to catch it at the open before that move happens, and then we hopefully catch the liquidity move of that session, and then we can move on to the next, right? So in terms of entries, what is the ideal thing we look for? Now, I'm not going to talk about time frames just yet, okay? So don't worry about time frames. So we are looking for this. So we're looking for mitigation and then mitigation. Now, either trading off here or trading off there. Now, in this situation, right, normally when we have break a structure, and then another break, so what we normally do is go up a time frame, right? However, for this style of trading, it's more like scalping. We shouldn't really worry too much about going up. However, I do go up a time frame just to make sure that the range still makes sense. And generally, what happens is, say that this was the 1 minute. Say this is 1 minute time frame, and when we have the third break, generally like the 2 to 5 minute. That does not look like a 5, does it? There we go. Does that look like a 5? Yeah. Generally, the 2 to 5 minute time frame is going to be the first intent, and we could trade off there. I'll explain what I mean because there's an example of this, right? Anyway, all we're looking to trade is following the mitigation. Okay, so what that means is we're trying to find the OBs that have mitigated previous OBs. Simple as that. And we're looking to confirm at these OBs, right? So let's start off thinking about this. So let's draw this. Okay, so we have breaker structure, mitigation. Okay, breaker structure. Now, say you're looking for an entry from this POI because we had this mitigation play. What would you do? So we have two options. Okay, you have option 1, okay, which is looking for our standard confirmation entry on the lower time frame. Okay, or you've got option 2, which is having a standard confirmation entry, but then you are incepting, so you're looking for another entry in between, and then for entry point 2 you are looking for the same thing. Okay, you have two options. You can either do a confirmation entry or you can do an inception. This is the highest probability setup you can ever get. However, sometimes when you're being too cautious, because when you are using the inception method, you are being somewhat cautious. Even for me, I miss a lot of trades because I'm doing this. Sometimes trades just react straight off the normal confirmation entry and then go. But for me, I do like to look for inceptions, but it depends on how I'm feeling on the day, how confident I'm feeling. And to be honest, with confidence, I can't really teach it. I can't really teach my gut instinct and how I feel, to be honest. But for me, it sort of differs between which I use. There's no set criteria as to what you want to use. It's completely down to you and your risk appetite. And one thing to bear in mind is that, whatever edge we have, it still will lose, right? You'll have losing spells, you'll have losing points. Just bear that in mind. Don't be shocked if a trade loses, because this is still a strategy, it's still an edge. At the end of the day, it will have losing streaks, it will have losing points, and so on. So we want to try and increase the amount of probability that we have. Okay, but say you're looking for a trade in there, and then you got another entry point following the next mitigation. You can either do the same thing, or you can either do number 1, or you can do number 2. So you can either do confirmation or you can do the inception. Okay, so let me put this out. So basically, the trading plan for this trade plan, you are looking for 1. You are looking for order flow in any direction, doesn't matter. Your higher time frame bias should not affect the way you trade this. You should be able to buy and sell from basically what price is showing you. Okay, so you got order flow, which needs to be confirmed. 2, what do you need? 2, you can enter off the mitigation via 2 ways. You have you have confirmation, or you have inception. Hold on. Confirmation with inception. Another thing to just to clarify is that inception is not just entering a trade off the 5-second time frame and so on. Okay, it's not that. Inception is using a confirmation within a confirmation. Just bear that in mind. Okay, so for example, say that this is a 1-minute time frame. Inception is not simply going to the 5-second time frame and trading off there. That's a standard confirmation. Inception would be, say that this is the 15-second time frame, and then within that, I'm looking for a 5-second confirmation. That's inception, so let's bear that in mind. So it's as simple as this. All we are looking for is order flow to be confirmed on any time frame. We're looking to enter off the mitigations via 2 ways. So either the confirmation model, which you should know by now, or a confirmation with the inception. In terms of targets, so targets is a little bit different with this. So essentially, your target should be the next structure point. Okay, that is down to you how you wish to play it. For me, what I look for is when I'm in the trade, I generally look for 10 pips or so, and I look to secure half of that trade from there. 20 pips is generally guaranteed of a move. And I generally like to secure. Bear in mind, you're going with a scalping mindset. You're not looking for a huge moves. So some of the trades you've seen from me recently, which have been pretty big, I did not intend for that to happen. Okay, I did not plan that. That's just happened. Okay, and I'll explain why we do that and how best to manage that. Okay, so generally your structure points is your liquidity points, and you're looking to take partials off there. But in terms of trade management, it's up to you when you want to take off. I don't want to take anything less. So as in, I would not close less than 5R. So I need to have at least a 10R move before I close any partial. Otherwise, for me, it's not worth it. I'll rather take a break even. But that's depending on what you're comfortable with. Sometimes a structured point will give you 10R and then you close half and so on. But again, I will have to leave that with you to determine what you are comfortable with doing. But I've explained what I do, and if you want to do the same, so be it. But you need to bear in mind you could take a lot of break evens like I do, purely because price can go to like 8 or 9R and then fully reverse, which is a bit annoying. Anyway, so another form of entry which I love to use, and it's something that I spoke about in the last intuition video, actually the one before that, about order flow transition, is when you have this. When you have, say, a bullish move, you have a lovely mitigation play, and then you have a sudden break of the mitigation, and then you start having bearish order flow. Okay, you start having mitigation. This is the most textbook way to enter, because you are generally catching the apex of a move. Now, the way that we need to see it is that price is fractal, right? So whatever happens on the 5 second will happen on the 15, will happen on the 30, will happen on the 1, and so on. Okay, that's what we're expecting. Okay, the closer you catch this, the lower the time frame you catch it, the better and the higher up on the move you catch. Okay, so that's how you get close to the apex, which is why I love trading these lower time frames. However, you do not need to have the seconds time frame to be able to do this. You can do this straight from the 1 minute, the 5 minute, then the 1 minute. Okay, you can use whatever structure you feel comfortable doing. Okay, another thing to bear in mind is that the seconds time frame is not exclusive to myself and the other mentors. You can easily have the seconds time frame should you wish. You know, it's still a cost to me, same as it is for you. So don't think it in that way. I know a few of you have questioned that, but you know, I still paid for it. Okay, you guys can pay for it too. That's just how it is. So you know, you don't need a seconds time frame, but for me, I do highly recommend it. And I have to admit, the risk to reward has been incredible ever since using the seconds time frame. And another thing with this is that you can get a better risk to reward in a short amount of time as you would with a general swing trade as well. So how is it that we're catching these huge moves? So is it expected or not? The thing is, it's not, and it's not planned either. Generally, I don't look above the 1 minute time frame. Well, above 5 minute, I would say. I don't look above the 5 minute time frame when I'm looking for these trades. Okay, I am looking solely for order flow and then looking to confirm it. That is it. Nothing extreme, nothing too difficult. Okay, just bear that in mind. I don't look at anything higher because you don't have to. But if you want to, you can. Okay, you have to be able to. What I'm trying to say is, because I found the most consistency when I try to interpret what I've watched, what I've learned, what I've observed. I've tried to interpret it into my own way, and this is what I'm trying to teach you guys. You know, what you guys are learning is my interpretation of what I see happening in the market and what I've learned, right? And I want you guys to try and make sense of it as much as you can in your own way, because sometimes you might not grasp it the same way that I do, right? I'm trying to teach it in the most simple way possible, which is why I never go into a huge amount of detail in certain things, because personally I don't feel you need to know, and if you want to know it, I'm not going to teach something that you'll find on baby pips. For example, I'm not going to teach the sessions time frame and so on. However, I just realized I am waffling, so I'll go on to back to the video and back to the strategy. So in terms of entries, right, we are just looking for our standard entry time frames, but just following order flow. Okay, so let's look at some. Oh, why have I done that? Hold on a sec. So let's get rid of this and let's get EU on. So where's yesterday? Okay, that's yesterday's trade. I was going to say, where's it gone? There's a trade before that, which I wanted to show. There it is. Okay, so let's go here. Okay, so this was a trade taken just before London even started. So this is what I mean is that you can follow this strategy from whenever, right? As long as it makes sense, as long as the rules follow. And this is a good example showing you how Frankfurt can give you an impulsive move. So yeah, so when I woke up, this is what I was seeing. Okay, and this is very simple. I didn't look far to the left, but what I can see is that price is very bullish. Okay, it's very, very bullish until we create this high, we have this low, until this break happened. Okay, because for price to be bullish and for it to continue, we're expecting a reaction here, right? But what happens? Price goes on to break structure and create this low. So now this gives us our first intent, which you guys should know. So that's rule 1, and then we have rule number 2. Okay, now rule number 2, what we can see is that this comes somewhat from this structure point here. Okay, from this liquidity wick that create this new low. Now obviously the impulsive OB is somewhere up here, so I would say it's probably along the lines of here. Okay, price didn't get there, it didn't mitigate that, but what we can see is that we have a mitigation play here of the successful retrace OBN, which went on to create this new low. Now at this point we have 3 breaks. Generally we're meant to go up a time frame. Now if we did that, which I did do, when we look at it, what we have is 30-second high, 30-second low, break of structure. Okay, and now we have the first bearish intent on the 30-second time frame, as well as order flow being fractured. So this is what I mean is that price is fractal. So what we're expecting is the 30-second to react from here and continue. Okay, that's what we're expecting. So for me, it still made sense to follow the 15-second order flow, because order flow was here, right? It was created here. Okay, and we have the point of validation, and we have the point of validation above this high at this point, because that's where the liquidity grab was. So not only do we have somewhat of a mitigation play, we also have the liquidity grab, which gives us a bit better, what's the word? A better confluence, that's the word. Okay, now in terms of entry, how did I enter this? So firstly I went to the 5-second time frame, and then I saw that the 15-second low and the 5-second low is pretty much the same place. The 5-second low is here, so for me that was far too much of a distance, and if we did break that structure, we'll have to go up a time frame again just to make sure. So for me, I went to the 1-second time frame. Now the 1-second time frame, what we can see is this. So we have this high. Okay, we have the low. This low got broken and we created this low. Okay, now where did this low come from? It came from this high. So we have a POI here. That's the impulsive OB, right? Purely because we have the low here, low, high, and low. Okay, that's the impulsive OB, sorry, and then we create this low. And this low only got broken here. Okay, where did it come from? So what we have is we have a low, we have a high, then low. Okay, so it came from somewhere within here. So I placed the order from here. Now I had an order at this point as well, just to see whichever one it reacted off. Alternatively, I could have just placed my stop loss just above there as well, but I'm just being a bit too comfortable with the 0.5 pips, to be fair. So I don't mind taking a loss should it get there. But this is a normal confirmation entry method. There was no inception involved here at all. Okay, this is a normal confirmation. We have the impulsive OB, successful retrace OB, price was taken off the SR. Okay, simple as that. So this is our standard 15-second order flow. Okay, and then entry point from the confirmation. Some of you guys, if you don't want to confirm it, you can enter straight off the order flow. Your highest probability option is going off the second order flow. So as in you have order flow 1, you have mitigation 1, mitigation 2. So your best option is to take the trade off after the second mitigation. So mitigation after mitigation. Okay, then you're looking to enter. So you can take a trade straight off here should you wish, which is high probability in a way, but obviously it doesn't hold the best, and it's pretty much a risk entry, but that's is higher probability than a standard risk entry, right? So please do not start doing this as risk entries and then start complaining, thinking that the win rate is not great. Because if you're doing that, then obviously the win rate won't be ideal because you're not confirming it, right? And bear in mind, we are just literally trading the lower time frame structure, so just bear that in mind. So that was that entry. So this entry is simply, we have order flow transition, and as I said, that is my most favored move. It's probably the most textbook setup you can have. So we have order flow transition, we have the two rules, and we have mitigation, which creates that bearish order flow and entry point following a confirmation entry. Okay, simple as that. Let's go on to the next entry I did. So let me go to the 1 minute. Now last time I looked back at this, it moved. Okay, it's fine. It's alright. It hasn't moved. So this one was very simple as well. So this one was actually during London. So what we had is, when I woke up, I didn't really see too much. And then what we saw was this whole bearish move continuation, but there was no form of entry, no form of mitigation play that I can see that was clear for me. Okay, the key part is it has to be clear for you to trade it, right? Now what I can see here is this. So from this move that broke this low, we have mitigation. Following that mitigation, we have this very impulsive move. Okay, and what do we know about imbalance? Imbalance generally will get filled, so we're expecting price to come back up, right? We have this mitigation play. Now for me to use this as an OB, it's purely because price is efficient, and this OB is not really, well, it's not an OB at all. The price move that went on to break structures from here, the order flow has been created from this mitigation point. So the point of invalidation is still here, okay? Because this hasn't mitigated anything. However, I still have confidence to take the trade off this. However, I won't be surprised if price was to wick up and then come back down, because it will still make sense for it to do so. If you were going to take a trade from here, you can do obviously as a risk entry from here, but as I said, it doesn't hold the best risk to reward. So how did I enter this one? Okay, this one was very straightforward, to be fair. So this one was a normal confirmation entry, a very normal confirmation entry. So this one, what we had was a high, we have the low, which went on to get broken, and it got broken here, right? So we had the range high and the range low. Okay, sorry, I don't know why this has moved. There we go. Okay, range high, range low. And then what we have was another breaker structure. Where did it come from? This OB here. Okay, now when we had that break, okay, I wanted to enter off this OB. Now technically what happened was, when this wick actually happened, it was far too quick, but I ended up taking a manual execution, and that's exactly where it entered. But ideally I would have wanted to enter straight off this refinement here, but obviously I was in the trade a little bit higher up, which is fine. And I also had an order at the impulsive OB, just as you would with a normal confirmation entry method. There's nothing fancy about that at all. Obviously I could have incepted it, I could have done a 1 second time frame here just to increase my odds, but at the time I didn't feel like I needed to, and it was becoming late in the day, as in late in the session, because this is approaching like 9 o'clock, to be fair, approaching 10 o'clock, sorry. So I wanted to catch that move before, because we didn't really have an impulsive move until this actually happened. So that 1 minute was fairly impulsive, but it didn't really follow through, as in this 1 minute was fairly impulsive, but there was no real follow through at all. We shouldn't expect a huge pullback like this. So for me, it tells me that the move didn't really happen, and then all we have is pretty much like very, very close price action, so it wasn't really clear. The impulsive move happened after that, and then we have that move. So what this is showing you is that you can able to catch, I mean, this went to a peak of, I think, 42R for me, something like that. Yeah, so it reached a peak of 42R, but I only took 10R from this trade, and then it hit break even in the end. But that is just showing you, I mean, the rate of return, I mean, to reach 10R for me, I mean, 10R was here. So 10R was achieved in the matter of 17 minutes. And I closed 10R at 20R. which was achieved in a matter of 21 minutes. So in 21 minutes of being in the trade, I've already secured 10R. That's the whole thing, you know. And in terms of aiming big, I don't aim big at all. I'm only aiming for that 10 20 pip move. But I don't set targets. I only take partials. So I took partials, closed my 10R at 10 pips, and then whatever happens from here. And generally what happens is I wait for like 50R or 100R to hit, and I'll take further partials off. Or if there is like a structural point for, like, for example, I don't think there was one for this. No, because I was aiming for this daily low that was created. So my whole idea was to follow this. I was assuming, right? I was assuming there was mitigation play here, and then hoping to catch the move all the way down to this low. But obviously that's not what happened. But I think price is pretty much heading there now, or if not even broke it. Yeah, it's already reached there. So the direction was correct, but I just didn't catch the high. I didn't catch the apex of the move. So even though I was technically wrong with my entry in terms of catching the whole move, I was still able to catch 10R, probably even more if I took further partials off, but obviously I didn't. But it's just showing you that you can catch a small move and still just get on with your day. Depends on how much you want to secure in a day, right? Now let me show you a different type of entry. So this was AU. So I was waiting to do this video after I had a trade like this. Okay, so this move, AU. So this one was a little bit different. I'll explain why. So what we had was this very impulsive bullish move, and we would expect some sort of mitigation play to continue up higher, right? Because we're obviously coming from a bullish scenario. But what happens is price goes on to break structure. We have the breaker structure, right? Now let's zoom in to this. So okay, what we have is we have this break. So this break happens here, creates this low. Where did this low come from? Came from this high and this OB. We have mitigation 1, okay? And then what we have is we create this new low, and then we have another mitigation. So obviously entry point following this is ideal. Now for me, I didn't see an entry confirmation within here. I didn't see one that was clear for me to take, so I didn't take the trade. I missed it. However, obviously if you're using risk entries, you would have caught that your first target was there, first target met, and then obviously leave the rest to run. That's if you took that trade, but obviously I didn't see that. But then what I saw was this. So why was I interested? Is when I saw this low being created, and then this was the high that was needed to break because there was no high here on the 1 minute time frame. This high got broken. Now that shows me intent. So what I did is I wanted to see where this was coming from and what's actually happened. And because I saw this pullback, I'm assuming that this was a lower time frame breaker structure, which it was. So I went to 30 second first, and then I went 15 second. Essentially I was trying to find what was, where is it? I was trying to find what was clear for me, right? So what I can see happening here is that we have the first breaker structure from the 15 second, we have rule 1, and then we have rule number 2. So we have the two rules confirmed, and we have entry point 1 and entry point 2 somewhere in here as the successful retrace. And then what we can see is obviously this successful retrace, and these lows, some count as somewhat liquidity, and price comes and taps into here. So why did I take the trade off here if there's no order flow present? So another way you can enter is that you can follow the two rules, because obviously what we're expecting is that price is fractal, right? So we're expecting when our two rules are confirmed, we're expecting price to continue. Okay, obviously that's an expectation. We're not, it's not gonna guarantee gonna happen. Okay, but we want to improve our odds as much as possible, which is why I've taken this trade the way I have. So in terms of choosing whether you're going to incept or whether you're going to confirm, you will develop this sort of gut instinct of when to do it, right? You'll know when to pull out an inception and when to not use it. Okay, so the reason why I used up this is because there was no order flow present, and I'm trading off the order flow being created. Okay, because we have the two rules, I'm assuming that price can continue bullish. Okay, that's my assumption. However, I didn't trade as a confirmation entry based on the assumption because it's not confirmed. So when price entered that 15 second POI, you know what, I should have just done a replay tool into that. I know. Hold on a second. There we go. Okay, so when price, and what I'm going to do is get rid of all my brushes. Please do forgive me with how messy my brushes become. Okay, so what we have is this. So we have the 5-second low, 5-second high. We have the break. So we have rule number 1. Okay, from here. Sorry, from there. Okay, and then we have this breaker structure, create this high. So we have rule 1 and rule 2. Obviously, I'm not going to take a trade off this successful retrace. A bit stupid. I mean, look at it. I mean, why would you trade off that compared to all the imbalance are sitting below? So for me, I didn't know where to trade off, to be fair, off this, so I highlighted the whole thing. I don't know why my boxes moved to there, because I didn't really use that. Essentially, I wanted that and this low. So I highlighted that. Now, I could have taken a trade straight off here if I wanted to. However, as I said, we didn't really have order flow, and we were creating order flow, right? We were creating it. Now, if you are going to take the trade off the very first mitigation, you need to bear in mind that the probability is very, very low unless you incept it or confirm it and so on. So what I did was, when price came to this 5-second OB, I went to the 1-second time frame and I confirmed it again. So now what we have is, we have our low, we have our high, which got broken, create this high, then we have a low, then a high. So we have rule 1, rule 2. To the entry of this little wick here, as this was the one that created the low, that went to the high, right? So the entry point was taken off here, and the stop loss was covering this low as well, the impulsive OB. And I moved to break even after I saw, because when we had the first break, I saw this candle, and I was assuming that price is going to come back and react and mitigate, but obviously it went further lower and then further lower. I don't think that's not correct. I think I should just say lower. Yeah, lower. It went lower and then carried on, and then once we broke that, then I moved to break even, and then I was happy to carry on. So this trade I'm still currently in, and this trade, okay, so this trade I didn't plan on this happening, okay, but this trade went on to hit 50R. Hit 50R somewhere. Where's 25 pips? So for me, it hit 50R here. Okay, so it hit 50R in the space of, 2 hours. So if you think about it from some of our higher time frame POIs, you won't hit 50R for at least a couple of days or a couple of hours, or probably longer than this. I'm talking about the rate of return is a lot higher when you do this, but it's not expected, right? So what I did with this one is, because I was expecting this, so I had this POI marked up. Obviously, this POI now should be changed, which I will do after this video. But because I saw this move and I was expecting a POI, I was expecting price to come to this POI, right? I only wanted to aim for somewhat of a liquidity target, and I didn't know where to aim for. It's either this high or that high. My first target was this 5-minute high, and to grab that liquidity, and I thought price was going to come back down. But obviously that didn't happen. So I took 75% off my trade from here. Okay, and I left 25% off. It's not 25% off. I left 25% running, and then I closed a further percentage. I closed 15% at 50R, and then I left the rest to run. I don't know what he's doing now. Probably going to come back to break even now. But I secured that, and I left 10% of volume running. So forgive me if you can hear the ambulance outside. I'll let it die down. Anyway, what's going on? Okay, I don't know if the mic is catching that, but basically it sounds like an ambulance is outside somewhere. Anyway, so here what we have is, I aim for this high because I didn't really know where to target, and then we have this high and then this high. But after that, I took that partial off. I left that percentage running. The reason why I do that, and the reason why I leave a runner, is purely because potentially you can catch a big move, and it does add up regardless of what percentage you make. Because here, let me show you this. And I wish I could show you. Actually, no. To be fair, there's a breakdown of this trade, so you can find that yourself. But this trade here, okay. That trade was taken purely off the 30-second time frame, and it reached a peak of 700R, right? Obviously, by that point, there was only 10% volume running, but 10% volume of 700R is insane, right? Regardless of the account size, it's still a lot. So, which is why I just leave a runner running. And the only way that I would close out that runner is if my charges were to become a bit too expensive, right? But generally, your swaps and charges, sometimes you have positive swaps. It does even out to a point where you're comfortable. So for me, I'm still comfortable holding this one, and I'm still holding a sell from AU here. Again, this is a very weird one on the 30-second time frame, and this reached 1 to 200 odd on this trade purely from the lower time frame. There was no higher time frame perspective at all, and I didn't look anything higher. But you have to bear in mind this is a harder way to trade, and it is a bit more intense because it is following the lower time frames. But this is basically the edge on how to trade your sessions. So trading London Open and New York Open, potentially Asia, again, as I said, I can't really comment because I haven't traded Asia with this, and I don't plan on doing so either because I value my sleep. You only want to trade the first few hours and catch that liquidity and then move on with your day. Generally for me, if I've entered during London and caught a big trade, I won't enter during New York unless I wanted to. I generally prefer to be off the charts. And for me, this has reduced my chart time from a couple of hours to sometimes less than an hour at times. I could do less than an hour of analysis and then enter a trade. It could be like 20 minutes, 15 minutes, and then I'm done. And it's insane. Like, I would partial out, and then I'm happy. I'm done for the rest of the day, and I can enjoy whatever I wish to do for the rest of the day. But yeah, it does take some time. So please do pay attention to what was said in this video, and please do practice before claiming that this strategy doesn't work. I've shown you proof that it works. You guys just need to implement it. But I know this video was a long one. I hope it was useful and I hope it was clear. But yeah, trade safe, guys.